Hey, what's going on, guys? Hope everyone had a good weekend. I know it's been a little bit since I've done an update. Couple personal things came up, as you guys saw in the chat with my grandfather. Everything's okay for now. Thank you guys for the condolences with that. But yeah, I mean, I just keep reiterating it since the April lows. Had a little bit of a pullback where I was down 15K. SPY, AMD, Meta, just small little losses that accumulated really quickly. Primarily that SPY January position. Been able to climb back out of that. Just from spot trading around that SPY position, and then kind of just focusing on some individual names, and primarily UNH. We had a couple good trades on QQQ. I kind of forget the other ones, but really this has been another big name for me, where we had a creek jump, right? I talk a lot about Wyckoff accumulation. If you guys didn't know the basis here, we had a three lower low that formed, and you guys can't see it here on the week or the monthly. But on the weekly, you guys can just see, right? I mean, we've been basically trending down from this distribution up here. We had a nice little pop here for a macro LPSY, whatever you guys want to call it. And then, from the series of the daily three lower lows that formed in gaps, we ended up kind of sweeping out this low here, right? This swing low highlighted with this black line, and I guess I'll just kind of draw like a box here as well. Right, this big blue zone, our swing low was swept out, and once we swept underneath that, the main thing that stuck out to me was the increase in volume, right? We didn't really have an uptick in volume on any of the moves down. Even on the recovery for the slower high, we really didn't move up in volume. And then the big sell-off here, we did have an increase of sell-off volume, followed by this, what I believe to be kind of the beginning of the accumulation, end of the distribution campaign, and then maintained high volume throughout, right? Without a new low being made. You guys can see the lows were pretty roughly set around 1850 without a new low being made, but volume remained relatively high. Any kind of break underneath that 1850 low was closed back above relatively strong. So this was, just accumulation here. And, you guys kind of have seen it for a while now. I've been notorious for getting in early in these ranges and then either stopping out or just kind of grabbing shorter dated contracts and not seeing the full thing through. I did do this a little bit earlier on this one. If you guys saw, I think it was back here. I tried this in the mid 25s or mid 20s. I can't remember where it was. I think I grabbed it here when it first peeked its head through 24. I grabbed it on this pullback on this day, or maybe it was this day, and then I stopped out of that position, and I wanted to wait for it to get a little bit lower down into the low 20s. But it really just created somewhat of a bull pennant, whatever you guys want to call it, flag, bull pennant, whatever. And really what ended up happening is we got a big pop out off of this September 17th candle, where good news came out, and it popped all the way to 3150. And really, if you guys take a look at this, right, from a daily perspective, this was the gap here at 29. And usually, I'm a big advocate of not chasing price, but with a consolidation this long, it's been about 415 days, so a little bit over a year. What we really need to look at is an accumulative base, and then looking at the automatic reaction or the highs of the accumulation base, right? So what we were looking for was 2642, or what we could have taken is this spot here at 2755, and really just use this as our spot to gauge where our creek jump would be, right? And the creek jump is a simple gap above the resistance or some kind of big breakout above the resistance. However we get above that resistance, you're expecting a pullback to the top of the creek, and then that to become a very simple SR flip, right? So, resistance becomes support, and then looking for that to maintain and then elevate off of that level. In this case, we had a unique scenario where we did get a creek jump much higher than the top of the creek and into this gap fill here, right? So there was a gap fill at 29, and this was that old floor as well, right before we got our, I would say, our accumulation shakeout candle, whatever you guys want to call this. I call it like a footprint candle. This was the main marker from August 2nd of 2024, and this floor is still really important. So we gapped above it. We pulled back down to the bottom of the base at 29, as well as this old floor here, and it pulled down, right? You guys can see this was the high volume here, and then the next 3 or 4 days were all in decreasing volume, right? So very, very, I would say, picture perfect harmonic divergence here. We're a respected price, didn't go much deeper, it went a little bit lower than 29, but really just started the position in this area here with shares and those December, I think they're 19, $35 contracts, and we were looking for a continuation off of this, right? I had this pretty much drawn out since the day that this happened, and we got a picture perfect entry. Still up about 250% on this, and really this is still a dip buy mode here. That's what I really wanted to cover over the weekend. Was, this has obviously seen continuation. We made a new high over this 32.30 range, right, the top of this September 18th candle, and really still looking for dip buys. I think the next big dip buy, you guys saw me try to take a small position on Friday. I took one where I got about 100% gain from $13 to 26 or 25, and then I tried again with $100 to see if I could maybe turn it to like 500 with like a 500% win. Instead, I took like a 50% loss or 60% loss or something like that. Those contracts were 10 cents and they went down to like 4 or 5. But I still think that this is very much a dip buy. This candle here could signal some exhaustion, right? We saw some sellers step in at the end of the day. So if we do pull down to 34, I still think that this is an opportunity to look for a long back up, once again up into this 37 mark. And people keep asking me why 37. It's this unfilled gap from back here. We just take this bit by bit. I always talk about these big accumulations. You don't have to tackle it all in one fell swoop. You can take shares for that or leaps. But then you guys can attack each individual range as its own, right? So once we claim 29, the next target is simple, right? It's this 37 gap here. Once we claim the 37 gap or the top of this July 17th, 2024 candle, as well as the gap, then we can target the next range, right? And you guys can see this other floor that formed here, which was actually our first low that formulated, right? This is a big spot here. Candles for this, I haven't even marked them if I'm being completely honest, would be 43.93 to 41.40, right? So this is a great spot here. We could just highlight this really quickly. Should have had this highlighted a while ago. Right, so this is kind of what we're looking for, and that's the next target if we base 37. But that's what I'm looking for. That's why I took the 35 calls. Once we base 37, I'll start to look for 41 or $40 calls, and then looking, kind of the same exact thing, and I'll draw that up at a later date. But yeah, still looking for a pullback to 34. I would be looking for, once again, 37 instead of the $35 calls, which I have now. I would just be looking for 37 or $38 calls. And then keep taking this bit by bit, but still a fantastic chart, guys. That I just wanted to highlight. This is probably the moneymaker right now and the one that's seeing the most upside in volatile continuation. This name has a very strong bid. You guys can see from the weekly as well just how strong this chart is. I mean, the volume here is absurd with continuity behind it as well, right? It's not just seeing high volume and just chopping. We're seeing continued breakouts above this. And a chart that's been consolidating for this long, like I said, it's been about over 400 days now. This chart is going to keep seeing movement, right? There's a lot of shorts that were likely trapped at the bottom of that. So this should have some fuel to keep going, right? And pullbacks are just dip buys in my honest opinion here. I think the only thing that would stop me out, right? Let's say I added at 34. Would be something below the EMAs, and I'm not much of an EMA guy, but if this were to break 34, I assume the 9 would pull down right around this here, right around like 31.78. I'd probably just risk the 9 EMA at that point for the roll on the current, not the current contracts, but the contracts that I'm going to take next. But yeah, I have no intention of closing the 12.19. I still haven't trimmed anything. I'm up about 30% on the underlying position with shares, and then via the December contracts, I still am full size on that one. I didn't get quite the size that I wanted on those. Still, what I mentioned in the Discord alerts, but I have no intention of closing these until we get to 37. Right, and I have no fear of doubling up on positions. Right, so having the December 35s and then grabbing whatever expiration and grabbing the 37 calls as well, I will definitely double those up alongside my shares. So that's first and foremost. I just wanted to cover that really quickly and how healthy this chart looks and how any pullbacks on this name still are very viable. All right, Lululemon, guys. Name has been completely beaten down. I think from a lot of quality issues, obviously a lot of exposure from manufacturing side of things to Taiwan/China. A lot of stuff going on with their marketing, their CEO. I do expect some changes to be occurring here soon as one of the main catalyzers of this, but really just a three lower low accumulation. This name has been in a very nasty downtrend. But you guys can see just in recent times in terms of volume, right? I know a lot of the three lower lows that I look for in accumulations are based off swing lows, but I'm really just gauging this one off of these volume footprints that we've seen. But this is the first main one where we saw a major large volume footprint and then a gap down from earnings. So this is our first low, right, where we broke down underneath this swing low here. Then we kind of, found a little bit of a base here. We pushed up. We essentially filled this gap here. And then what did we get? We got another low from the next earnings, which is our secondary footprint candle. So we have one low, two low, and then we started to trend down, right? And then we got one more gap down as our third low with some of the highest volume that we've seen, right? And if we take a look at this on the monthly, remember this is a lot like UNH. We had some of the highest volume that we've ever seen on LULU since the conception, right? Since back in like 2011. Obviously they IPO'd back in 07, but some of the highest volume that we've ever seen. I think this is the highest volume by quite a hefty margin here. So once we see this, we have to kind of acknowledge the fact that selling distribution is likely over, and this is the beginning of an accumulation campaign. So it's about starting to align our phases and looking at essentially textbook accumulation patterns, and then trying to either find the tests, the LPSs or the SOSs, and then getting in via shares and being prepared for any terminal shakeouts or springs. This is still in its infancy stages, but I want us to take a look at as to why I think this could be the bottom. Right, it did sell down into this little gap here, and this gap you have to go quite a bit or far back with. Back here from March of 2020, so the COVID lows, right, 154.86 to 163 was this major gap here, and really the last one. There's a swing low from back here on the actual day of COVID, but just taking a look at where this sell-off has formed into is very interesting, right? Obviously, it didn't fill it quite yet, so there could be a sell test in phase B. If we think about this from a textbook schematic, where we could get some kind of further breakdown here that sweeps out not only the footprint candle low, but takes out these interim lows here from like mid-September, and it comes down, fills the gap, pushes out, rebases, right, starts to accumulate here, then we get a pop, some kind of SOS, and then we rally up, right? But remember I said treat these like onions. Obviously, this has a long way to go, but first phase of the onion would be 206.09 as our first target here. And I want to kind of keep this as basic as I can. If we just take a look at this from, wrong thing, J. If we just take a look at this from here, right? Let's just take the earnings candle high or the footprint candle high. Really nice little area where we could potentially take a breakout trade over 176.30. Could be the spot, right, if we get some kind of a breakout. And you guys know I don't really like trend lines, but there's a 3-bar trend line that's kind of forming here. This also coincides with the 9 and the 20 EMA, which are very tightly wound here. So, if this breaks out through the trend line, gets above the 21-day, which is basically Friday's high, and then that coincides, like I said, with this this footprint candle high at 176.30, we could get an entry here for end of the year December calls, looking for 206.09, right? This is a really good start. But first and foremost, I think I just want to start this with shares. I think this name is extremely undervalued. Risk to reward is extremely lucrative here. I mean, if we just take a look, if we get an entry right around 176, this would be a 17% move to 206. And I think this name can trend quite a bit, right? If we just take a look at some of these gaps, let's just say our entries here, and we get to the top of this gap over some time, obviously, that's a 54% gain to 271, which is the second low. If we get all the way to fill the gap of the second low, that's an 87% gain. And then if we push all the way to the top of the gap here, which is like 341, that's almost 100% gain on just the underlying itself, right? So I really just want to start shares here and maybe some leaps into 2027, so January 2027. Those contracts aren't too unfairly priced, or right around like 800 to 900. I know that sounds like a lot, but capital tie-up wouldn't be the worst, right? If you were just able to grab one or two, it'd be about $1,600, give or take. for potential to eat for each contract if it does go up to like 335, 330, to pay about 700%, right, or right around 7 grand. Contracts would go pretty bonkers, and it has plenty of time behind them as well. So on Monday, I really think I just want to start shares. I want to start the leaps into the January 2027. And if we do get that basing here, like I said, treat the first area as the first layer of the onion, potentially end of year, so December 205, 210 calls, to see if we can try to get a big move up into this 206.09 spot to fill the first gap, right? And then obviously holding the leaps and the shares for a much higher potential. This would be kind of the first phase of this, right? And if it does break out and it doesn't really base 176 and it breaks lower, no big deal. I would close the end of the year December contracts, hold my shares, expect a terminal shakeout, or not terminal shakeout, sorry, the sell test in phase B, where this just simply breaks down, takes out those lows, comes off 154, right? Probably take a, add into my shares at 154, add into the leaps at 154, wait for this to recover 163.51. If it bases here, hey, then we can restart these 206s with a better cost basis, and then ideally this pushes out and rebases the earnings candle high, right? Kind of consolidates here, whatever it ends up doing, and then looking for a pop, some kind of LPS, and then a move into the gap, right? So that's kind of what I'm looking at here. But the analog here are the parallels between this and then also UNH are uncanny, and we, a lot of these names, guys, we've seen them start exactly like this. A lot of the 2022 ARC or growth basket all started like this as well. They came off of massive distributions. Obviously, those names had a really long period of accumulation and sideways price action. These look more like events that are happening very, very quickly. But you can't deny the volume patterns. You can't deny the similarities from a lot of the names that we've seen, right? Especially UNH. So I really like this chart here. But yeah, just kind of just depends on what we end up seeing come Monday. But come Monday, I do want to start shares, and I do want to start the January 2027 330 calls, and kind of taking it from there. But if we do get that breakout over the trend line, over the 21, which is Friday's high, and then this 176.30, I'll also start 205 calls for December, and then kind of taking it from there, right? I mean, next earnings cycle is December, so this is December 4th. Could the catalyst be earnings? Absolutely could be. Maybe it's not. Maybe that is what catalyzes the sell test in phase B. I think it's a risk that's worth taking. So I wouldn't go super, super heavy just because LULU isn't notorious for, or I guess like friendly with its options. Open interest is usually lacking. The bid-ask spread is really far apart. So this could be pretty risky trade. So, I would kind of go light in size. That's what I'm saying. I'm putting a lot more emphasis on the leaps and the shares, but it could be a good opportunity for some light size in the 205, 210 call for December. But this is definitely the third focus for me, kind of going into end of year and moving forward. But, a lot of people have been asking me about SPY. Really, guys, I don't really see too much on this. The risk reward here is pretty skewed, where it really doesn't favor too much. This thing has just been nonstop up. A lot of talks of a bubble. You watch Chem or just kind of look at Twitter in general. I don't have a read on this at all. So, I've been spot trading this every once in a while when we see these massive gap ups or massive gap downs to try to reverse it, but really no edge beyond that. A couple of people have been asking me about AMD as well. It really hasn't cracked this lower high at 164.53. But I don't really see an edge here to be trading this to the downside. It could happen, right? Maybe if it gets under 153.73, like I still have drawn here, that would be an opportunity if it retests 153.75, 153.70-ish from the downside to look for a move into 146. But as of right now, I just don't see I don't see it happening as of yet. So that's really all I got. UNH, Intel still continuing the trades on those, looking for rolls on those if applicable, and then LULU kind of being thrown into the mix as well as a potential accumulation play here with long-term leaps, long-term shares, and then potentially a shorter dated contract for December to try to take out that first layer of the gap at 205. So that's all I got for you guys. Hope everyone has a good rest of your Saturday night, or technically it's Sunday now, so hopefully everyone has a good, refreshing Sunday, and then I'll see you guys on Monday, and we'll kind of take it from there. All right, guys, moving to UNH, since this is another thing in my portfolio right now. Chart looks fantastic, if I'm being completely honest. You guys already know I did another video covering the accumulation here and how I thought we were in phase B, and I was really hoping this flag or this pennant here would kind of break down and come to 271. If 271 didn't hold, looking for some kind of terminal shakeout or spring for the third lower low, and then looking to get really heavy off of that. I just kind of drew it out a little bit further down the line here, as you guys have seen, and then looking to get heavier down here, right? However, you guys saw this broke out to the upside. It pushed out on harmonic volume once again from the September 9th candle, and really just pulled back in a very controlled fashion. We found a nice bounce off of this this gap fill here, right? So this gap from May 14th or May 13th, as well as the gap that was created from September 9th. That's why I have two little lines drawn here, and I was willing to buy down into 319 and then risk 319 for the roll here. And you know, it did bounce off of that, got a little bit higher, still looks kind of like a lower high, but the controlled sell-off here and the divergence here via volume, in my honest opinion, this just looks like a cup and handle now, right? Where we have a little handle that has formed here, and it looks like we're getting a bull flag here for the handle portion of it, right into the 9 and the 21 before we start to get a push back out. So that's really what I'm watching. I'm not too concerned with this position at all. If we do pull down a little bit lower for the flag, I'm still willing to add into 335 and or this 332.50 spot right here, and then maybe a little bit more of an add if we drop down into 319. Risk is still the same, 319.71, but I do expect this area here to be the handle for a potential cup, and then looking for a pop off of this back up into 378, 380. So this still looks really good. Just letting the daily candles kind of play out, not really doing too much on any lower time frames. I'm very rarely watching this on the lower time frames. So I've had a few questions on this one, but the weekly just shows a lot, right? I mean, we have the harmonic breakout on the weekly, 2 bars closing near the highs here. On decreasing volume, I'm just expecting one either gap up or some kind of intraday push that leads us to the highs here, and then seeing a continuation from there. One thing to note here that you guys are going to see in the next chart is the monthly, right? The monthly is so interesting, where we had this distribution occur up here that I've covered multiple times now, and really when it made this new low, right, and it pushed down into, you know, the 250s, we saw the highest volume that we've seen in a very long time, if not ever. I mean, the only one that I can think of is back here in 98. But this is some of the highest volume that we've ever seen back in May, and from there, right, we had our accumulation pattern kind of show out, and then we're starting to break out towards these highs. I want you guys to take a look at the next chart that I'm going to show you guys. So just want to cover this really quickly. Still think this chart looks good, but just remember the volume here, and let's take a look at the next one, because I think this is a fantastic chart to pair with UNH and INTC as kind of like our third chart to be focusing on into the end of the year.